Okay, we are live. People are coming in. Ed Skursky, good morning. First in the room. Let's see, David, good morning. Jay, Warren. Oh, brilliant, filling up fast. Okay, Scott, so as you share your screen, we'll be
all right
to go.
So I think today is a very important call, actually. So we're approaching 2018 bull market. This, when we broke out from the 2018 highs, it triggered a bull market. That bull market has rapidly turned into a bear market. And typically bubbles, of which this was undoubtedly one, retrace the whole of their things. So this green line, which we're just about at, is the typical stopping point for an ordinary average bubble. Now, I don't think this is going to hold. And I think we're going to get a bounce here. I think this bounce is going to be bullshit. I think it's going to suck in a lot of people at 20K. And I think we're going to see a cascading fall that is very, very scary, even scarier than what we have now. And to answer where I think it'll stop, I think it'll stop not as a function of technical analysis, but as a function of external parties stepping in to support the market. Now, there's some game theory involved. If this thing bounces at 20K and then falls, everyone's going to sell. Around here, we're going to get a wave of selling. And then there's a bunch of leveraged people that are almost fucked. The Celsius people, Three Arrows Capital, leveraged long miners. There's a bunch of other contagion in those hedge funds, and all that yield farming stuff. Anyone who got one of those, oh, it's risk free. You just lodge your Bitcoin with us, and you get a yield. That's all bullshit. That was always bullshit. I never did any of that. I never told anyone to get into any of that. And I always told everyone who asked about that if you don't know where the yield's coming from, you are the yield, and that's all probably Ponzi's. So the bullish case is we've got a line at the old highs, and that's strong support. That's the bullish case. The bearish case is all this crypto hedge fund yield farming bullshit is interconnected, and what these yield farming guys did is invest their own yield farming inflows into other Ponzi's because they couldn't find any yield. And, they're all promising 15, 20% APY yields, and they're investing in Ponzi. So the bear case is there's another shoe to drop. There's leveraged miners that haven't been shaken out. There's more bullshit to happen. And when this happens, it's really going to get very, very ugly. Now, one sec. Let me just find. There's a current Three Arrows Capital. A lot of this stuff is on chain, so you can see where so Three Arrows Capital keeps posting collateral, and we've got their liquidation price because it's on one of these DAOs. So they're liquid. They keep posting collateralization. They've got $492 million worth of collateral. Current price is 20K. If Bitcoin hits 13,602, this shit is going to flash crash because they're going to market dump $492 million worth of Bitcoin, and that, if it hits, will take it below 10,000, probably well below 10,000. At which point it would become a generational buying opportunity. Like it would become, one of these, And you can see the same thing happened in 2018. If we go back to the old school. So here it really looked, this is the bear market before. Here it really looked like we'd found a bottom, we'd found a higher low, we found a second higher low. We were holding a floor, it looked fucking great. Oh fuck, it's back on, and then dump from 6 down to 3 in a couple of weeks. I can't rule out, just as this went from 6 down to 3, a dump from 20 down to 10-ish or below. So what stops that? What stops that is someone stepping in above this floor price of 13,602 and supporting the market. And there's enough well-capitalized people that they could do that. They could hold the line if they coordinate. The Binance guy, SBF, a couple of others could hold the line here if they wanted to. But arguably they could make more money by letting it just completely crash, kill all the dead wood, and then buy their Bitcoins back at sub 10K. That's something that I can't rule out. Now, why do I think 20K isn't gonna hold? Look at this. We had buying at 2902, exhausted some buying pressure. We have buying at 2129, exhausted some buying pressure. We've got selling, and now we've got more buying. So these 3 days of even a little bit of buying pressure, those are all dip buyers who can't buy at 20. So chances are, I believe what we're going to see is a hit to 20. Hey, Jonesy, can I give you a call back?
Who's that?
Scott.
Yeah, I got my cool.
See you, man. So what I think we're going to see is a drop to between 20 and 19.6, which was the old highs, a rally which looks pretty legit, and then that rally peter out, and then once we cross here, it get really, really ugly. That's what I think is the highest probability. A stopping points about, first stopping point would be 15 to 14. Second stopping point would be about 10. Third stopping point would be potentially a fair bit lower than that, like 7-ish. Now, what would be the, now, a big question that you'll probably have is, let's look at alts. Why haven't, sorry, it just takes a little while. I'll zoom on the call. So let's look at the last month. Ethereum's been kind of fucked. Quite a lot of alts have been kind of fucked, but quite a lot of alts have done pretty well compared to Bitcoin. The reason for that is that we're talking about forced deleveraging and forced unwinding. And you sell, when you're forced to sell, you sell what you can sell. And Bitcoin and Ethereum are the easiest assets to sell. So there is another shoe to drop with alts. These alts all have another 80% left to drop, in my view. So the way that it works is, in a forced unwinding, they sell Bitcoin to see if they can be left with their alts. and then Bitcoin crashes again, the alts start crashing, and then the alts have to be sold as well, and then the alts really go for a fire sale. This is not the time to be stink bidding on alts. It's the time to be stink bidding on Bitcoin. Where would I stink bid? A little bit at between 14 and 15, a bit more at 10, and 7.5-ish, a little bit less. That's where I would be stink bidding. And that would be, boy, if you can get your Bitcoin back here cheaper than 90% of participants have held it, amazing, right? Amazing. Now, what does the future hold for crypto? So what we've seen is a purge, a night of the long knives, a bunch of stuff that wasn't real, Ponzi's, bullshit like Hex, down 99%, all the bullshit being purged from the space. And what we're left with is that Bitcoin was the winner last cycle. Bitcoin was the winner this cycle. Bitcoin was the winner the cycle before that. You come at the king, you best not miss. If only Bitcoin survives out of this cycle, it armor plates Bitcoin. Bitcoin is the clear winner here. It's the clear thing to hold. If it survives, and I don't think there's any danger of it not surviving, every time it survives one of these, this is the worst ever for crypto, by the way. This, in 2018, this was individuals getting wrecked. This is institutions getting wrecked. It's a whole other thing. Like all these institutions, all these hedge funds, all these crypto hedge funds, they're completely fucked, like completely fucked, and all interconnected and all completely fucked. Stephen, if you want to short, how would you play it? Personally, I wouldn't short. I would. I agree with Ian. If you wanted to do it, I'd use the CSI short setup. Shorting is drastically more difficult than going long. I would bottom pick after exhaustion rather than try and short it. Shorting is extremely stressful. It's like 10 times as difficult as going long. And if you don't have the skill for it, there's no shame in not having the skill for it, right? It's like driving a Formula One car compared to a taxi. So I would be very, very cautious about shorting. Why? Because if you look in a bear market, look at what the rallies are like. The rallies in a bear market always look like bottoms. That looked like a very convincing bottom. That looked like a bottom for sure. This one looked like a bottom, and we're out of trouble again. This one, boy, it looked like a great bottom. Looked like we're off to the races. It's very, very easy to get fooled and flipped around, and honestly, just too hard. Now, yesterday, I did some checking on the metaverse sector. Decentraland, the software, the underlying Mana, had 70 unique users for the whole day. 70. We've probably got fucking more than that gonna watch this video, and that's supposedly a $1.2 billion market cap. That's worth zero. Like that shit is literally fucking worthless. There's absolutely no argument that an online game with 70 users a day is worth a damn thing. The Sandbox had 200 users a day. Even worse, right? Closing below support, well fucked before its bubble kickoff. Once it gets below here, it's going to get really capitulated. This is where all the VCs got in. This one's fucked. Let's look at the layer ones. Sol compared to Bitcoin bouncing off the lows quite hard. Luna's still fucked, obviously, just fucked. Nothing going on there. AVAX bouncing tepidly off the lows, same as that near. Bouncing tepidly off the lows. FTM, a bit more of a convincing bounce off the lows. This is all bear market rally stuff. I wouldn't trust this at all. This is not the time to get in alts. Now, the things to be concerned about are the things that Three Arrows Capital holds as collateral, and one of them is Woo, which gives me a bit of concern. So Woo, they tried to support it. It got down to just below 10, and they pushed it up to 16. These guys are trying to hold the line here, but if Woo gets below here, this could flash crash down to sort of below 5 cents, and that would be incredible buying. This one is actually going to survive. I thought it was incredible buying at $1 at 6 cents. It's like, oh fuck, like that is actually time to withdraw some money and back the truck up. But I'm concerned that Three Arrows Capital has it collateralized, and it's the last thing to go. So because this market is thin, they're going to sell it last, and it'll be like after everything else gets sold. They'll sell Bitcoin, then Ethereum, then AVAX, then all of those, and then they'll sell their little shitters last. Look at some Glassnode stuff. So there's some things that concern me here. So we see miners moving coins to exchange here. That's a little bit concerning. They're getting ready to sell if that bounce fails. And let's look at the miner balance. So the problem is that miners have been holding off selling, expecting the price to bounce, and they haven't got this bounce. This is quite concerning. This means that in a drop after 20K support fails, these guys could be forced to capitulate. That could get very ugly, and we would expect at the bottom of the cycle for some of these big miners to go broke, have their machines repossessed at cents in the dollar, and their collateral fucking used up. So NUPL, we are into the red zone, which is why AWC switched off. Thank fuck for that. We are finally into the capitulation zone in Z score. So technically this could stop any time, or it could stop a little bit lower. Our exchange balance, let's look at the hard right edge of that chart. Exchange balance is dropping. That's slightly bullish. Hodlers are adding coins here. That's good to see. So this short-term MVRV, this is really quite accurate at picking bottoms, and you can see that we're not quite as bad as the Corona crash lows, but a little bit past the 2018 bear lows. So we're in the zone where it could stop, but I've just got the feeling that it could stop. It's not a bad bet to buy at Bitcoin 20K, but I've got the feeling that there's one more shoe to drop. And we've got the lowest dormancy reading in recorded history, way lower than it's ever been before. Very, 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 bearish reversal time. Leverage too high for my liking. Which means either a short squeeze or a long squeeze. Our miners are holding off, hoping for a bounce. That could go one of either two ways. And you can see huge exchange net flow volume. So people are buying this dip. Whale deposits to exchanges. Whales are starting to buy this 20K dip. But they bought the last one as well, and that didn't work. So overall, what's the picture? The picture is, and we should actually look at Ethereum much weaker than Bitcoin, sliced through support here. You wouldn't hold Ethereum over Bitcoin. Ethereum is, in my view, is likely to end up substantially lower. I wouldn't be surprised if we saw a flash crash to $600 Ethereum. Yeah, this one could go really bad. Paul says, I was mining the bottom of the last bear market. I earned $3 per day, then back from a max of $50 per day. Present rewards are $7 per day. Okay. Stephen, there's no support and resistance doesn't mean much except for right now, because we're talking about forced unwindings. There's no lines you can draw on the chart, no round number that has to hold or doesn't have to hold. It all comes down to an individual couple of people getting together and saying, hey guys, we own the exchanges. We're going to permanently damage this whole ecosystem if this thing crashes below 10K. We probably got to take the hit and support it. So it really comes down to, can a handful of guys get together and say, okay, let's hold the line here. Tether, let's start printing. Binance, let's buy. Let's fucking buy. Let's buy together. Let's buy at the same time, and let's not let it get out, and let's hold this pig up. So it really comes down to people and not lines on charts. So I don't think there's any key support. There's no. We have a fundamentally different condition right now. We were in a bull market, in an expansionist phase, economically speaking, and now we're heading into recession. It's a very different thing. So, what worked in a bull market probably won't work in a recession. It's unreasonable to expect things to stay the same if we're in recession. People are going to be losing their jobs soon. So the bottom line is, the picture is it could stop here. I think it's unlikely to hold here. I think the highest probability is it stops somewhere 14 to 15. And I think minority probabilities are stopping around 10 and stopping around 7. I would be very, very surprised if it got below that, but it's not out of the question. Now, if you're looking for a play, the play is waiting for a big crash, waiting for the feeling that it actually can't get any worse than this, and buying it on GBTC. So if we look at the premium, all categories. Not even showing them. They're not even showing grayscale anymore. Yeah, I think grayscale has to survive because they hold the Bitcoin that they say they were going to hold, and it's currently trading at a 30% discount to net asset value. So in a crash, that could fall to a 50% discount on net asset value. If you were buying Bitcoin at a 50% discount and it's already crashed below 10K, you'd be getting your Bitcoin for sub 5K. I think on a regulated instrument, I think that's probably a pretty smart play. That's probably where I would look at doing it. Yeah, the discount is a red flag. The discount means there's weaker demand for Bitcoin, right? But at the peak of the bear market, the discount should be at its maximum. It's just Google. So let's look at a chart of this. So let's look at 3 years. So it was trading at a premium. People were willing to pay extra to get into Bitcoin. You can see the exact moment, February 26, where it flipped, and now it's at a 33% discount. At a 50% discount, boy, it's pretty attractive. Grayscale BTC is an exchange-traded Bitcoin trust that's regulated where they hold a certain amount of Bitcoin. Ben, how bad is the Celsius and Three Arrows? Bad. Celsius, bad. Three Arrows has ghosted all their creditors and they ran to Dubai. And Sunday is the next thing that I wanted to talk about. So Ben has neatly pointed out that bad shit often happens on a Sunday. Why does it often happen on a Sunday? Like this is a Sunday, this one was a Sunday, this one was a Sunday, this one was a Sunday. It often happens on a Sunday because if you're going to crash the market, why would you crash the market? Because you want it to go down a long way so you can buy the shit back cheap. Why would you do? When would you do that? You do it when it was easiest. When is it easiest? It's easiest on Sunday. So everyone's got to be alert on a Sunday, and Sunday is tomorrow. John, I don't think there's a chance Grayscale goes tits up because all they do is hold Bitcoin, and they've got the Bitcoin they say they're going to, and they don't do anything but hold Bitcoin. I think there's a very minimal chance Grayscale goes tits up. Yeah, so the problem with Celsius and Three Arrows is that a lot of these other funds were cross-investing in either the same shit that Celsius and Three Arrows were in, or in the same shit or in each other. So they're all owed money by each other, and there's contagion between them all. And there's a non-trivial chance, like a high chance actually, that there's other shoes to drop, other funds that are gonna go broke. Yeah, it's a case of the tide's gone out and you see who's swimming naked. Three Arrows is the biggest hedge fund in the space, and they were just degen longing at the top, right? Like really degen longing. Okay, guys, that's about all I got for today. Is there any questions?
No, that's really great. Thanks for that breakdown, Scott.
You're welcome, guys. Enjoy your weekend.
Catch you later. Ta-da.